How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you guys a better understanding on how we're looking at tackling these markets. Now, if you go on to enjoy this video, don't forget to leave it a like. All the support you guys provide is very much appreciated. And if you have any questions or queries with regards to the analysis we go through today, then just leave them down in the comments below. Now, I just want to apologize for my absence last Sunday. It did actually take a 10-day holiday over to Turkey, hence my absence. So the VIP chat was actually quite quiet last week as well. However, as you can see, I'm back home in Manchester, ready to tackle these markets this coming week. So there's a few pairs I'm going to go over in today's video. Probably going to touch base on 2 or 3 pairs, and then any pair that I don't go over out of my watch list for this week, I will provide analysis for in the Learning Lounge group chat. Now, the first pair I'm actually going to touch base on in today's video is the Euro US dollar market. So you can see here that we have 2 areas of demand marked out, okay? And the reason for this is because this market is trading us in a bullish way. We have the overall bias of a bullish market, so therefore we want to be looking to buy into this market. Now, where do we buy into this market from? Well, these are often areas of demand, okay? Whether they're hidden order blocks or fair value gaps. So what I've gone ahead and done is marked out an inefficient area here that price has actually come to trade down and into and rejected quite well. And I've also marked out a fair value gap a little lower down here in the markets. Now, both areas are completely valid and they would both be following the higher time frame bias of this market. So you can see originally that I did want to see price trade down and into this area here, as this would give us a deeper correction. Therefore, it would allow us bulls to buy in at a cheaper price and ultimately profit more so. But it would also encourage a lot more demand, because those that have been selling price off will be removing those orders from these highs that are set. You know, as price trades us down, the orders where people have been selling in, they'll be closing those positions. And as a result, us bulls will be here waiting to buy in to push price higher, right? So there's a complete flip in the balance. Those selling in will be removing their orders. Those buying in will be injecting their buy positions into this market. So we can expect, when we have a deeper correction, a bigger push in the opposite side. And that's just because the turnover in hands is a lot larger. Now you can see here that price has rejected well to this area of inefficiency. In order for me to actually get involved in this market, I would want to see some kind of relevant break from this area. I'd want to see a break in the last protected high that created the lowest low. The last protected high, realistically, is this one here. So I'd want to see a break in this high before I even look to buy into this market. Now the reason for this is because if we have a break in this high here, that would suggest that we are no longer following the laws of bearish structure, where we protect the highs, but we are now following the laws of bullish structure, where we break the highs, breaking this high here, okay? It's all a case of waiting patiently, sitting on our hands, waiting for the opportunity to present itself. That is 90% of Forex. Waiting patiently, waiting for price to play into your hands. So if we have a break of structure here to the upside, brilliant. I'll look to get involved in some buy positions. Once price does break structure, we can then expect price to probably pull back initially to set a higher low before going on to set a new higher high. This is where we'd be looking to get involved. So we'd look for a area of demand from the impulsive wave that broke the structure initially, wait for price to pull back down and into that, and then we'd look to buy into this market. Now, if price does continue to trade us in a bearish way, trading goes all the way down and into this area here, which I feel could be likely, then we just wait for the exact same pattern to display itself. So we'd want to just see price trade down and into this area for the last protected high that created the lowest low to be broken. As a result, we then have confirmation of a reversal, a change in hands, and that's when we look to buy into this market. So I am looking to be a bull. I'm looking to buy in. I believe this market is here to appreciate over time, especially with a weakness in the US dollar at the moment, just down to everything that's going on fundamentally. It's just a case of waiting for the opportunity to present itself to us. It's as simple as that. Moving over to the XAU USD market, which is the gold spot to the US dollar. Okay, so with this, very similar situation. This is down to two things. One, because we're seeing strength in gold, but also because the US dollar is quoting this pair as well. We've recently had the break of structure that gives us confirmation that now bullishness is here to stay and that we're going to see a continuation in bullish structure. It's just a case of getting involved in this market via a pullback. We had the pullback last week. Unfortunately, I was on holiday. I don't trade when I'm on holiday. I don't trade when I can't put the time, effort and dedication into the market because things can quite easily go sour. So I take a full step back, which allows me to enjoy my holiday. It also avoids me making any stupid decisions. And then when I come back, we crack back on. But yeah, price did come down to actually liquidate price here. It didn't come to actually trade into this zone, which is one of the reasons as to why I wasn't triggered. I was expecting price to actually trade into this order block here before trading this higher. However, it just came to liquidate an area above. If we go down to lower time frames, we may see a more refined area of demand, which there is. This order block here acts as a demand zone. Price came to trade into the 50% mark perfectly. So it's just a case of it didn't go as deep as we wanted it to, but it did actually trade into a valid area of demand. So we have confirmation there, which is good. So now what I want to see is for price to break a high for a second time. Being this one here, this is probably the most fractal protected high that we can realistically use as confluence when we look to enter in on this market. Once we have that, I will be looking to buy into this market. So we've seen price putting in this new impulsive wave. It's just come to clear this area here, which is brilliant. We're going to see a new hike to the upside, probably another pullback. Then we'll have the break. Then we'll have a deeper correction to come down, and then we will see the structure we want to longer term. So this is my thought process for this market. This is exactly what I'm expecting to see. When we have this deeper correction like this, it would just be a case of finding the area of demand that we want to get involved from. And once price does do this deeper correction, after we have, this more fractal break of structure to the upside, that's when we can look to take part in this market. We'd be setting our stop loss just below the low that we get involved from, but our take profit could be set at the last higher time frame high, or if we really wanted to stretch our take profit target, we could actually set it as high as this point here, which is the last peak, because we expect price to continue to accumulate and to continue appreciating. Now you can see that the returns that we would generate from this are upwards of 1 to 22 RR, which is 22% for every 1% risked. So that's my thoughts for the XAU USD market. We have absolutely rinsed this market over the course of last month. I don't see why we can't continue to do so. Just a case of, as I said earlier, being patient, waiting for price to play onto our hands before we take advantage. Okay, now finally I'm going to touch base on the Great British Pound to the US dollar. Nice, quick, easy analysis here. I just want to cover some points and then let you guys go. So again, this is a very bullish market. Down to recent events over in the US, we are seeing a lot of weakness in the US. A lot of people are skeptical about the economy and the future of the US. So we are seeing a lot of strength being introduced as a result to the likes of the pound and the euro. People are pulling out money from the US, putting it into the Great British Pound, into the euro, into other major currencies that hold some weight, let's say. Now you can see that I've marked out two areas here. Two areas of interest that I'd like to see price pull back down and into before taking us higher in the market. We have seen price react to one of two of these areas. It's just now a case of being delivered with the confirmation we need in order to take part in this market. So you can see that when we go to the daily, what I've marked out here is a fair value gap. Okay. Now, as I go down on the time frames and we go to the 4 hours, we can actually refine this to a hidden order block. And as you can see, price trades into that perfectly. So now that we've had a penetration of this area, we've had great rejection to the upside. It tells us that enough demand has been introduced at this point to actually flip the balance slightly, right? We are seeing more strength in demand in bulls in the market than we are bears, right? Now, to give us confirmation of a complete reversal in trend, we would need that break of structure. That would then confirm to us, right, we are no longer following the laws of bearish structure. Supply isn't in charge of the market anymore. Demand is. So like the other pairs, I would like to see the last protected high broken in order for me to get involved in this market. So with pretty much every single market we've been over in today's video, price is within the final stages of what we need to see in order to execute a buy position. We've been delivered with the penetrations of these zones. We've seen great rejection to the upside. We are simply waiting for entry confirmation, which comes from the break of structure, because that tells us one trend is finishing, a new trend is starting. Once we have that, we can then refine our entries, get involved in the markets and profit. So what I will be doing is setting alerts at these points and simply waiting for price to follow protocol. As soon as it has done, best believe I'll be getting involved. But that right there, people, is actually going to summarize this Sunday sessions video. I hope you guys have enjoyed. I hope you guys have missed me. We have been outperforming every single week, back to back, and I'm honestly excited to get back into a good routine. If you guys aren't involved in our VIP services, I would really recommend getting involved, because as of the 1st of August, I will be running a PAM for all my VIP clients. It will only be accessible to those that are VIPs. So if you are wanting to have a more hands-off approach with your trading experience, you just want to kind of throw money at something and allow it to generate you an income, the PAM is probably something that's worth looking into. This is a percentage allocation money manager where essentially I trade your funds. So if you are wanting to get involved, leave a comment down below or message me on Telegram and get you all set up and sorted. But yeah, I just want to wish you all a very profitable week. Thank you very much for watching, and I'll catch you all in our next Sunday sessions video.